Hey, what's going on, everybody? Stock Operator here with another Monday update video back from my 2 week vacation I had with my wife and my kid, and looking forward to making the videos again. And I got some cool stuff to show you guys today. In this video, what we're going to do is we're going to go over the TA of all the major indexes: the S&P 500, Nasdaq, Bitcoin, some crude oil, and gold. And then later on in the video, I'm going to go over my proprietary market monitor. I got some interesting charts for you guys now. I was working on it over the vacation. It's a little bit clearer to see, a little bit easier to read the signals. So that's something to look forward to. So if that's what you guys are into, stick around. All right. So what you guys are looking at here is the IWV. This is my preferred index I track with my market monitor. And what you can see here is I have these lines that are colored red, orange, green, yellow. And they're basically my market monitor's forecast line on the cycle forecast. So these are some lines I drew before I went to the vacation, what the cycle was forecasting. And of course, they change a little bit. And so we had a follow through day on October 20th. So this is the new line. So I'm going to just change it for you guys right here. I'll just get rid of this one. And yeah, so that's what it kind of looks like. So this is our cycle forecast. So right now, here, let me move this down. We are market monitor green, day 5. We've moved about 1.95%. Distribution day count is 1, and the average number of days in a green cycle is about 12.7, and we move about 3.78%. And as you can see from this green line, it kind of represents that average move uh, for the market during that time period. So just wanted to start with that just to show you guys. I'll do more about this later on in the video, but let's get into some of the major markets that you guys probably follow more closely than this one. So what I wanted to do is I wanted to start with gold today because I think it's the most interesting one because it's at a turning point. So we'll go to gold. So if you look at gold here, we were kind of making some calls back here about it was going to break out, and wow, look at this nice breakout here. Just went parabolic and very strong for gold. And then around here, we actually got kind of bearish. We started shorting it on this day here, and then the volatility picked up, and yeah, I mean here it is. So we think that gold has topped here. I mean, honestly, in a major market like this, it's pretty obvious to see a top because it's kind of been going really parabolic here, and it had this initial candle with some massive volume, which was the initial change of behavior is what I believe. Okay, and what I'm doing technical analysis with. So this is the initial change of behavior, and then we had a secondary test that was very strong, went parabolic. And then we had another change of behavior here, and they tried to do it again, gapping it up, okay, massively. This was like a 4% day or something like that. And then we had this big 6.5% day um, on gold. Yeah, it was like a 6% day. And it's basically telling you that the market has topped. I mean, this is the largest volume it's had in a very, very long time. It's akin to back here. So I mean, easy to call that this up move is over and it's going to go sideways. Now this moving average, the quarterly moving average, can catch up. For those who are new here, I've got 3 averages on my charts. I got the yearly moving average, the quarterly moving average, and the quarter of a quarter. So 16, 63, and 252. So we think that gold is topped here. This bounce is very weak for gold after this big down day. So uh, that's basically a very interesting chart. Gold has topped. Another thing I want to talk about that I'm getting quite bullish on is crude oil. So we'll go to this. So crude oil has kind of just been going nowhere, especially after this large volume here. It's pretty looks like distribution. Um, but I mean, with all of this volume here, it didn't really go down. It just kind of stopped at this yearly moving average here, and didn't go anywhere. So it was actually, it looked like distribution, but it actually looks quite constructive here. It almost looks like a bullish reaccumulation uh, sort of a thing. With now it has a little spring here and it's bouncing, looking pretty interesting. Now, when we go to like a larger time frame here, I mean, this thing has kind of just been flagging for about 2, 3 years. And the volume, you don't like to see volume come into a high like that on this area at the top of the range, as that was very bearish. But given this volume that's coming in here on crude oil, now this is the ETF, of course. The futures are a little bit cleaner. Um, I think that we're about to have a nice move in crude oil to the upside, and we've been kind of adding more crude oil exposure uh, in the portfolio, a channel account. So crude oil looks to be having a spring. It's going straight up after a nice decline, and you can see the volume is supporting it, and it's going, you know, uh, quite rapidly. And it's everything you want to see for a bullish setup here. If it can get above this level here, that would be very nice. Okay, for the bullish side. So that's crude oil. Let's move on to Bitcoin. Okay, so I know it's Sunday right now, but it's having a nice move right now. It's up about 3%, and so it stops. It's in this little range here. Okay, we were talked about a little bit earlier how this breakout was pretty weak, uh, and it needed to go sideways. Neutral from that point on. We were calling it neutral like here or so. Um, and it had this kind of up thrust sort of an action. Basically, an up thrust is when it goes above this range and then comes back down. Um, and it did that, and it did that on heavier volume than the upside. So this decline is actually quite bullish, and especially because it was not able to stay below in this green area that I drew here. So this thing is just stuck in a range. If Bitcoin can get back to about what 68 here and kind of just hang out in the upside of the range, that would be what we're looking for on Bitcoin. So constructive action. This volume regime here is quite constructive, even though it looks to be pretty nasty. So we're still neutral to bullish on it, but that's Bitcoin there. Let's look at the QQQ. So I know the QQQ is up another 1% after hours here. So this is extremely bullish. This thing broke out of this candle here that it had when Trump started tweeting about, you know, escalating the trade tensions. And then it had that big day on big volume and it gapped up. So that's extremely, constructive when you have no follow through. And that's kind of been a theme of this entire rally. Every time there's big volume that comes into a down day, it doesn't follow through and it instantly gaps up. So, like we had that here. It did actually follow through here after this candle, but that wasn't really that bad of a. That was like a gap up fail kind of thing, not an actual down, really bad down day. This is the bad down day, gaps up on low volume. This is the bad down day. It kind of uh, reverses intraday, gaps up on lower volume, and then same thing happened here. It's just that's what's happening. It's just a lot of accumulation at the lows continually is happening in this market. So very strong action out of the QQQ. It's gapping up again after this gap up. um, I would expect it. I mean, we're on day 5 of the cycle and it's up another 0.8%. So it's close to a max of a cycle. So it's not the best risk reward for tech stocks, but anything could happen in this market given its location. It could start to really accelerate here, given how many times they've tried to take it down and they were not able to recover. Or actually they were able to recover every single time. So very strong action from the Qs. So S&P 500 is pretty similar, just a little bit less volume actually in the S&P 500. I think the S&P 500 could be stronger given that it has more industrials and more oil stocks, which I think people are going to start rotating into. Um, but S&P looks very similar to Q, so nothing there. IWM, this is the small caps. This is very interesting because we had this KRE happen. The regional banking stuff, private credit stuff was kind of coming into question. So it's interesting that the IWM is holding up this well, given what's going on in the banks, where most of the stuff in here is, um, I mean, I guess it's like 10 to 20%. So, but it's holding up very well. Now, IWM is going sideways here at highs. It is a little choppy, but I mean, given that this thing has been, the widowmaker for so long, I mean, this is actually quite strong for this index to not be failing so much. And when we had this big red candle, it was the first to pop out. So there's that as well. But anything can happen. I think more sideways or even some sort of weakness would be good. If this thing can come back and test this candle again, that's what we would be looking for to add more small cap exposure. So with that, that's pretty much all of the major indexes. Let's go over to the um, charts on the market monitor that I wanted to show you. So let's go back to the IWV here. This is the index that I track, but yeah, let's go to some of these charts that I made. All right, so what I want to start with is the stage analysis. So I made this chart over my vacation just to kind of make it easier instead of looking at, data on my spreadsheet. It's a little bit friendlier to look at this kind of data. And so as you can see, the green line is stage two stocks or stocks in uptrends. The red line is stocks in downtrends. The yellow line is stocks that are kind of going sideways, not necessarily in uptrends. Um, and the orange line is stocks that are not necessarily in downtrends. They're going sideways after a downtrend. So as you can see here, this is data going back 1 year. Okay, so 252 trading days. And you can see that the market kind of always tops out when it gets to about 44-ish percent of stocks that are in uptrends, as you can see here. And we had that little pullback once we hit that number here. Uh, and it's starting to come back. So we're seeing an increase in stage three stocks and a decrease in stage two. And there's an elevated level of stage four stocks. So there's like a really bifurcated market here. It's very interesting that there's that many stocks in downtrends uh, given how many stocks there are in uptrends. So it's just a two-sided market here, and so that's what the stage analysis is saying at the moment. Uh, what we are looking for next is kind of because this is the April lows, as you could see, and then after that we have the orange spike, which is stocks that are going sideways after a downtrend, and then we get the that's kind of how it works, the stage two stock. So red, orange, green. So what I'll be looking for next is a pickup in yellow as stocks get tired. So that's what we're looking for now. Okay, so this is the correlation index. This is basically it takes all of the top 50 stocks in the S&P 500, and it basically tells you if they're correlated or not. And I like to look at this with the VIX. But essentially, whenever you're below 10, it's a little bit risky. There's a lot of complacency in the market because every time it gets below 10, we tend to have a little pullback in the market. Okay, so that's that correlation index below 10. Now, this is something really interesting. This is the 10-day trend indicator. Basically, just where the volume is and where the advancing issues versus declining issues. And every time we have this sort of a spike happening from a point 0.8 level to a 1.1 level, there's it's cause for caution in the market. When you go back and you look at all these, what is this one? This is around January, right? So if we look at January on the IWV, this was January right here. So it's just we could keep going sideways to up, but it's just a cause for caution, in the intermediate term. Okay, so that's that. Um 10-day trend indicator. So the next one is the drawdowns. I like this chart. This is a very interesting chart. This is the drawdown of the IWV. And it's just showing you, every single dip that's around, 3-ish% gets instantly bought. Uh, and yeah, so we're just looking for a dip down to 5% again, because that would be a normal and natural thing if we got another 5% pullback. And yeah, just looking for that. So that's a drawdown chart. That's pretty interesting there. This is the anxiety index. This basically just tracks the number of advancing issues and declining issues over a 25-day period. And typically it triggers opportunity in the market. So in April when the anxiety index was close to 30K, it's of course a low. It's a good buying opportunity long term. And of course, over in January and December, like we were talking before, when the anxiety index got to 15K, that's not really the best opportunity long term because, then it went down right after that. So we're kind of hanging out here below 20K. So it's moving in that less, opportunity zone. Okay. So this is the long term breadth. And this is what I've been kind of like watching for a little while, how it's been so weak. Typically in a very bullish market, the long-term breadth would be higher, around 75. You know, that's where it was, in at the end of the last kind of bullish cycle, leading into November, December of last year. And it kind of just really crashed here. And it's been, even though we've been going straight up, it's been, hovering around lows, but now we're getting this breakout. So that's pretty bullish on the long-term breadth. Okay. So this is the 20 bull and 20 bear column. I track the number of stocks making 20% moves in 5 days. And if you look here, we had a big spike in stocks that were down 20% in 5 days, and we don't really get those that often. It's akin to this January move. Okay, so it's, as you're kind of seeing in the market monitor, there's a kind of theme. It looks like January of earlier this year. And so that means, going into March, April, maybe we could have similar situation here in the market. So just watching that because this has been a very strong year. As you can see with the 20% moves on the green side, it's been very, very bullish, elevated for a very long time, especially after August. It's been very strong. So that's that. So this is my Tom DeMark buy sell indicator. And as you can see in April, when it spiked over 1,000, close to 1,500, that was a great time to buy. And then we had a momentum indicator with this kind of the sell indicator came in here. But I like to watch the buy. It was ticking up here recently, which is quite interesting because the markets were at highs, but it didn't really spike. So this just tells you that there's an underlying downtrend happening with many stocks. But it didn't really, there was no panic. It didn't really spike, which is interesting given that we did have a spike in the VIX recently when Trump did that little tweet about escalating the trade tensions again. But this didn't spike at all. So that's interesting there. This is a Bollinger Band indicator, just tracks the number of stocks above their 45-day Bollinger Bands. And as you can see, this whole year after April, it's been just very, very bullish compared to earlier this year. And we did get a spike in stocks below the Bollinger Bands, which is all right. So with that, that's basically everything on the market monitor. I'm glad to be back making these videos. Really appreciate you guys coming back and watching the content. Gonna start up here and making more videos on the regular. And yeah, if you guys have any questions or comments for what you saw today, hey, feel free to write it down below. I'd love to answer you guys. And if you like the content, feel free to hit that like button and subscribe. And with that, I'll see you guys on the next video. Cheers.